Hi everybody, my name is Mary and I'm talking now about the pound-dollar pair or cable. And the reason I'm talking about this, I've been always keeping an eye on this for the last few weeks, and there haven't really been any clear signals yet. And the pound has been in an upward trend really for a year, and it has what you could call actually an upward trending channel here. And it looks like the pound just this evening is starting to break out below that channel, and that could be a pretty bearish break, because when the pound makes these significant moves, this is one pair where you can really get 500 to 1,000 pips within a month. So it's a pair that people really should keep an eye on. And you can also see that the pound is below all its major moving averages now except the 200-day. It went below the 100-day today and the 50, and it's also below the 5 and 10-day moving averages. So, and you can look at the pound from the delta charts, which I like to use, although there's never an exact answer until after the fact, but it looks like this could be playing out in a manner that this was a 1, this was an inverted 1, and so these were important tops, and this could be going down. And the other alternative is that this could be a delta 1, which could be an important bottom, and it could be going back up again. So there could be a real break this week when there's the UK reporting their GDP numbers, which come on Wednesday, and then followed by the US, US GDP report, which comes on Thursday. And of course, since it's going to be a 3-day weekend in the US, there might be less liquidity on Friday. But if you look at this chart and you look at the weekly basis, this could be a false break, and it could be going back up again. And of course, since it's a very news-driven pair, and it responds, of course, to the news that comes out of the EU about these ongoing debt problems, if there's some type of at least temporary resolution that the markets are satisfied with, then the pound could resume its move back upward into this channel. And otherwise, if this continues to drag out, and if the UK GDP shows a weaker than expected reading, we have additional bad news out, then you could see what would be a clear break. And I would think a clear break would probably be a break and close below the $1.60 level, because that could give a signal that there is a true top in here. And of course, the markets are still anticipating interest rate hikes from the UK at least by November. So that's really 6 months out. But Mr. King, the Bank of England chair, Marvin King, has made his thoughts pretty clear on this, and he's more concerned about slowing economic growth, about high debt levels, about some losses that the UK banks could take from countries that they've lent money to. So it looks like, while it's technically still true it could go either way, it looks like the downside might be favored at this point, particularly if you get a weaker than expected UK GDP reading. So that's what I'm thinking, is that on Tuesday, possibly Wednesday, that there might be a particularly good short in the pound-dollar pair. Of course, there may have been opportunities missed to short it. But on the other hand, you've also got important news coming out this week with the, well, it's not really news. You've got May 26th and 27th. You've got another G8 meeting, and you can be certain they're going to be talking about the sovereign debt issues, and they're going to try to find some way to resolve it. So this could be a very difficult pair to hold if there's going to be a lot of news coming out and the financial leaders are determined to solve these problems. They could increase the size of the European Stability Fund or something like that, figure out some way for these banks to write off their losses. It's a lot less likely that Greece is going to be able to sell off $50 billion worth of assets over the next couple of weeks. So that's what I'm thinking with the pound. And if the delta 1 is actually in, and this was a delta 12, then we could see a move that would take us much lower, even 1,000 pips lower over the next couple of months, depending what else goes on. And remember that we won't be having this liquidity coming into the markets anymore, the stock markets, after the first week in June. So another important thing to look at today is the fact that the VIX spiked up today. Out of its Bollinger Bands, it spiked up to over 18, and yet the stock market still closed lower. So this means that we're trending into what possibly could be a correction, a bear market or a correction. And a bear market means the indexes are down about over 20%, whereas a correction can mean they could, drop 5 or 10%, which really wouldn't be too surprising considering the levels at which they've gone up. So what this means is that we could be trending to higher levels of the VIX, and you might have to see a big spike like this up before we see real fear in the market again. So all of this is bearish for the pound-dollar pair, and that's why I like it for a couple of reasons, and also because this looks like it really is a clear break, although there's still news this week. You have to wait to ascertain whether or not that's going to be a real break that's going to take us much lower.